Yesterday, in the first half of the day, the euro gained value amid the news. German inflation rose more than expected in June, standing at 0.3% and 6.4% on monthly and yearly basis, respectively. Germany's core inflation rate also advanced. The figures confirmed the scenario outlined by the ECB President Christine Lagarde. Earlier, she mentioned the need to continue raising interest rates and be guided by core inflation. Although these indicators fell in Spain and other member states, consumer prices in Germany and the leading European countries remained high. Yesterday's statistics from the United States showed that initial claims for state unemployment benefits decreased to 239,000 for the week ended June 24th. The focus of market participants was on US GDP growth. The country's economy grew at a 2% annualized pace in the first quarter, marking a significant upward revision to the 1.3% previous estimate. Against this background, the euro and the British pound fell sharply against the greenback. Moreover, the quotes are likely to end the week on a negative note. Much will depend on today's statistics. Friday's economic calendar is full of important news releases. The UK will report data on economic growth for the first quarter. Britain's economy is expected to be unrevised from an initial estimate published last month. If the indicator is revised upwards, the pound sterling will have a chance of trimming early losses. Germany is set to release statistics on retail sales for May, but this report will hardly affect market dynamics. Traders may also take notice of data on unemployment change in Germany. Analysts expect the figure to remain stable in June. In addition, the European unemployment rate is forecast to hold steady at 6.5%. A greater emphasis will be placed on consumer prices and core inflation in the euro area. Economists expect euro area inflation to fall to 5.6% in June from 6.1% in May. Core CPI is projected to rise to 5.5% from 5.3%. In this case, the European Central Bank will have no choice but to keep lifting interest rates. Furthermore, traders should pay attention to data on personal spending and income in the US and the core PCE price index closely watched by the Federal Reserve. The latter is expected to dip by 0.3% in May, which may put some pressure on the greenback. However, data on the University of Michigan's consumer sentiment and expectations, as well as Chicago PMI, is forecast to be upbeat. Therefore, the most likely scenario for today suggests a continued rally in the US dollar. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, the level of 1.0900 acts as resistance. If the price jumps and forms a fall breakout at this mark, following Eurozone inflation data and reports from Germany, a sell signal will be generated, thus bringing the euro down to 1.0855. If bulls take the lead in this area, a false breakout at 1.0855 will create a buy signal. In this case, Europe's single currency will most likely remain range-bound, heading for 1.0900 and 1.0940. At these levels, I recommend going short on a rebound, counting on an intraday correction of 30-35 pips. Alternatively, if bulls fail to regain control of the market at 1.0855 and the euro fixes below and tests at this level from the bottom up, the volume of short positions will increase further. Thus, the euro will slide to 1.0816 and probably 1.0777. At the mark of 1.0777, it would be a wise decision to go long on a rebound. Long positions at 1.0816 and 1.0855 can be considered only amid a false breakout. Besides, going long will be relevant after the price returns to 1.0900 and consolidates above it. The level of 1.0940 can be seen as a target. As for the British pound, much will depend on GDP data. In my view, bears will make every effort to take control of 1.2661. Therefore, I will go short only amid the false breakout at this level. If the price falls below 1.2611, weighed down by downbeat statistics from the UK, and tests it from the bottom up, the market will face a major sell-off, with sterling sliding to 1.2569 and probably 1.2527. Long positions can be opened amid a false breakout at 1.2569 and 1.2611 or on a rebound at 1.2527. As an alternative, if the price stays firm at 1.2661 amid gloomy data from the US, the British pound will have a chance of surging to 1.2710. At this mark, traders are recommended to go short on a rebound to catch an intraday correction of 30-35 pips. Good luck and have a nice weekend.